All right, everybody. I'm super excited to have everybody on this call with us tonight. I'm just really excited to share this next hour with you. For those of you that are coming on the call right now, we have a lot of people coming on for quite a few different reasons. I know that we have some professional athletes on the line, as well as doctors, attorneys, but maybe it's a college student that's trying to figure out their next step, or possibly a busy mom working a 9-to-5 job looking for an opportunity to possibly supplement her income, or more importantly, lower her taxes. But whatever it is, I'm very confident that we have something for everybody on this call tonight. So I absolutely urge everybody to get out a piece of paper, grab a pen, grab a pencil, and jot down all the information you're going to be learning. Now, if you're unfamiliar with the expert guests that we have on for the call tonight, I really believe that you're in for a treat. Sandy Botkins is a former CPA, or former IRS tax trainer, a CPA, and the man is an absolute expert in this category. I'm going to let him share a little bit more of a story in a moment, but he's going to be explaining with us more about taxes and how to lower them and how to save on your taxes, which is something that the wealthiest people in the world understand how to do. Now, for me, in my journey in this business, when I started, I was an absolute amateur. I had no experience in business and definitely no experience in taxes. I had my accountant, aka my father, do my taxes for years and years and years. And so I didn't understand the difference of tax laws for people that owned a business and people that didn't. So it was definitely a foreign subject to me and a big shocker. So for a lot of the information that you may hear tonight might be a shocker for you. So that's why I encourage you to grab a pen, grab some paper, and jot down some notes. Now, I got started in this business a little over 2.5 years ago, and I really only looked at it as a way to pay off some medical debt that I was accruing and possibly some student loans. And it did just that, but at the same time, I was able to really learn how understanding and having a home-based business has some major, major tax advantages. So after Sandy is done, I'm going to have my good friend Jeanelle come on the line, who is a registered nurse in the critical care unit. She was working in at the UCL hospital in Los Angeles for years and years and years, and now is transitioning into becoming a nursing professor, as well as an entrepreneur, creating a 6-figure passive residual income. So she's going to share all that information with you. So for those of you that are on the call kind of thinking like, I already have everything figured out and I have some things lined up, I highly recommend you guys stay on the call and take a closer look at the information that we're going to be sharing with you tonight and see if it's not something that resonates with you as it did for all of us. So as for me, I'm super excited for the info. I have a notebook with me. I'm going to be jotting down as many notes as I can. And again, I encourage you guys to do the same. So I'm going to turn it over to Sandy now. He's going to share a little bit of his story and then, of course, share with us the nitty-gritty information so we can save money on taxes as well. So Sandy, thank you so much for being on the call with us tonight. I think that you're an insanely smart man, and I'm very honored to be able to learn from you. And thank you so much for doing this call for us tonight.
Well, thank you. I can't tell you how honored I am to be on with everybody. And hello, everybody. I am just so honored to be participating with Liza and Luis's organization, and I understand there'll be a number of other people with various types of business on. But I'm also very honored to be speaking to you, self-employed individuals. You know, heck, my parents were self-employed. I'm self-employed. So I've always respected anybody, and I don't care what the self-employment is, who wants to make a little more money and just take a little risk in order to make a lot more money, actually, potentially a lot more. So anyway, I'm going to be covering a lot of things. This is a very content-rich program. So you're going to want to get a pen, you want to get a paper, because I am going to move. This is sort of a 30,000-foot overview of what's in my books and videos and so on. Now, the good news also is that all of you will be getting a recording of this. So you can listen to it again. If you missed something, don't worry about it. You will be getting a recording. And I'm also going to be saying some surprising things. Now, here's the first thing I want to start off with. Most people don't realize how big a tax bite is in their income. You're going to spend more on taxes for most people than you will spend for food, housing, transportation, and clothing combined. And I'm talking federal and state taxes. And for those of you in Canada, federal and provincial. In addition, there was a study done, I think it was done by Harvard, where they wanted to know what percentage of the population could retire at age 65 with the same standard of living they had before retirement. The answer was shocking, 4%, which means 96% of everybody listening to this, if they don't make some kind of changes, will either have to continue working at 65, reduce their standard of living, or live on some form of charity. Now, my point is, how would you like to be in that top 4%? Because the taxes are the #1 expense in North America, and we can get those down legally, morally, and ethically. You think maybe we can cure those retirement woes? Of course. You know, I'm going to say something that's going to sound kind of funny, but the government is the biggest bookie in North America. because they want you to succeed in business, because the government has learned something that many other countries haven't learned. That's what made this country great. And that is, from little acorns come big trees. Now, what does that mean? For example, Apple Computer didn't start with 200,000 employees. It started out of Steve Wozniak and Steve Jobs' garage. The big internet giant Amazon didn't start big. It started out of Jeff Bezos' garage. So the government wants you to be in business. And what's interesting is that we actually have two tax systems in this country. And when I say that, most people think, oh, sure, Sandy, one for rich and one for poor. And that's close, but not quite right. There's one to make you poor and there's one to make you rich. The one to make you poor is the one designed for employees and for people who don't know the rules. So even if you're self-employed, if you don't know the rules, you're just as bad as an employee. Because if you're an employee, number one, you don't get that many deductions that you think you might get. Number two, you're taxed on $1. And number three, if you even get a deduction, it has to exceed a certain threshold before you get any benefit. But if you're self-employed and you know the rules, that's the one to make you rich. Because number one, you're taxed on your net income before the government gets one dime to drink. Not $1, but your net. Number two, you get everything that an employee gets, plus you can write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that, by the way. You can set up a pension plan that I promise you makes any government plan look small by comparison. In fact, the plan I'm thinking of allows you to put away $210,000 a year. There's just enormous benefits to being self-employed. So the government passes good tax laws for you to be in business. And these good tax laws will generate deductions. By the way, I want to mention something about a deduction. A deduction is an indirect form of cash, because that's what it is. So these deductions effectively create cash that you never have to pay back. Essentially, what the government is giving you is free financing for your business. And let me give you a good example. Here's an example of Mary. Now, Mary is an employee, or she could be a self-employed person who doesn't know the rules, and you're back in the same boat. And she has cell phone expenses. That's normally not deductible as an employee. She's paying them, you just can't write them off. She has mortgage interest. All right, that's deductible as an itemized deduction in the United States. If you're in Canada, you don't deduct your mortgage interest. If she pays rent, that's not deductible in either country. She has car expense, driving to work, gas, repairs, insurance, not deductible. She likes to eat out a lot. She doesn't want to do a lot of cooking, not deductible. Mary likes to entertain a lot. She goes to movies. She likes to go to hockey games, play golf, go to theater, not deductible. Medical expenses have to exceed a high threshold. In the U.S., it's 10% of your adjusted gross earnings. Canada, it's a little lower. And other expenses. But here's the point. By having a self-employed business, whether it's USANA or some self-employed business, and knowing the rules, now portions of these expenses that you're already paying, I want to emphasize that, now may become deductible. I call this redirected taxes. Everything I'm going to say flows from this slide. I'll tell you that right now. You know, I've been lecturing for over a quarter of a century on tax and financial matters, and I have found that based on all of my lectures to direct sales professionals and other home-based business owners, that people are way overpaying their taxes to the tune of billions every year. And by the way, I'm not the only one who noticed this. John Potter, who is the president of the American Institute of CPA, said exactly the same thing. And even worse, well over 95% of the people who are overpaying don't realize they're overpaying. Now, why is this happening? This is happening for three reasons. The first reason is lack of knowledge. As you're going to learn today, there'll be some things I'm sure your accountant didn't tell you. You know, you don't know what you don't know, and that's just the way it is. The second reason is procrastination. Procrastination is a huge killer of deductions. You know, if you don't have something like an alarm to wake you up in the morning for your appointment, you may not get up. Same thing is true with tax law. If you don't have something triggering you, kind of like a little birdie, to write down your mileage, to write down some entertainment and travel questions and things that we're going to get to today, you're not going to do it. Procrastination is really probably the #1 killer of deductions in the country. And the third reason is fear of the IRS. And the sad part is you don't need to fear the IRS or Canada Revenue Agency, because if you know what you're doing, there's nothing they're going to do to you. There's a horrible myth, and I don't know where this myth came from, that if you take less in deductions intentionally, you'll reduce your chance of audit. And that is not true. Believe it or not, that is not true. In fact, there's a couple of other cash drain myths that I want to share with you. One of the biggest is only 7 words long. And those 7 words are, my accountant takes care of my taxes. And by the way, I have a similar myth. My spouse takes care of my taxes. If you learn anything, learn that. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? The point is, accountants are essential. No one should be doing their own tax return if you have a business. No one. I think you're crazy doing that. But the problem is, your accountant is only as good as the documentation that you have and the knowledge that you have. If you don't have the right documentation, there's only so much they can do for you. It's got to be a partnership effort. Does that make sense? Now, here's another interesting myth. Some of you may have seen me. I was participating in these big mega events with Tony Robbins and Donald Trump and General Schwarzkopf when he was alive and so on. And I had somebody come up to me and said, Mr. Botkin, I loved your program. There's only one problem. I don't pay taxes. I get a refund every year. And he didn't even realize he's getting back his own money. That's even sadder. And he wasn't even getting it all back. So I ran the numbers. Somebody who makes $50,000 a year in an average tax state, I'm not taking California or New York, I'm picking an average state, of net taxable income, that's net of all your deductions and exemptions and credits and whatever, pays roughly $12,917 in federal, state, Social Security, and Medicare. If you're in Canada, it's federal, provincial, and CPP. Now, withholding and estimates are normally more than this. Why? The government wants to make sure they get their money. That's one good reason. But the second reason is if you get a refund, don't you feel better? I mean, this person didn't even realize he was paying taxes. So even though this person is getting a refund, he's not getting it all back. He's still leaving $12,917. This translates to 25.8% of his net taxable income is being paid in taxes. And by the way, I'm not talking about Donald Trump here. I'm talking about a hardworking single, I think it was a lady, hardworking single lady netting out $50,000 a year. Now, somebody makes $100,000 a year of net income, they pay 32.4% in taxes on the average, and somebody makes $250,000 of net income pays 37.7% of what they make in taxes. And that's just an average tax state. If you live in a place like New York or California, you're paying more than this, believe me. So you're paying a lot in taxes. You may not realize it, but I promise you are. Now, here's another myth. Sandy, I'm a home-based business owner. What kind of fringe benefits and deductions do I get that a big Fortune 500 company like or a big corporation like USANA gets? Believe it or not, you get the same tax advantages that a Fortune 500 company gets. You know, I have a book called Lower Your Taxes Big Time, which I'm going to recommend to all of you. In that book has 137 pages of fringe benefits, and virtually every single one of those applies to you as a home-based business entrepreneur. Every single one of them. A lot of people don't realize that. Now, here's another big myth. Sandy, I'm only working my business part-time. So unlike, say, Lewis, who works full-time. What kind of tax deductions do I get? Answer, you get exactly the same tax deductions, exactly the same tax benefits that Liza gets working full-time. Same thing. It doesn't change. Now, here's a myth, and I don't know where this got started. Well, Sandy, I'm not making any money yet. I'm brand new in the business. I'm not making any money. I even have a loss. Do I have to worry about taxes? I want you to write something down. And I want you to drill this in your mind, that the amount of money you make or don't make, is immaterial for tax planning to benefit you. Now, what do I mean by that? Remember I said the government's the biggest bookie in North America? They subsidize you to be in business. And they subsidize you in three ways. Whether you're U.S. and Canada, you still get the same, more or less the same subsidy. The first subsidy is if your business generates a loss, that loss can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 in a job, or your spouse is earning $50,000 in the United States, and you have a $10,000 loss from your business. You only pay taxes on the net, which is $40,000. And by the way, if you increase your deductions, you take tax planning seriously, you increase that loss and you increase that offset. So that's why I'm saying it doesn't matter what your income is. Now, that's one way they subsidize you. But let's say the loss exceeds your whole income for the year. You're a single parent, and it exceeds your whole income for the year. Then they subsidize you a second way, where you get to carry back all business losses 2 years and actually get a refund from the federal and state government for the last 2 years of taxes that you pay. You can actually wipe out all the taxes you paid for the last 2 years and get a check. In Canada, you get a 3-year carryback. It's a little better in Canada. And finally, even if you wipe out all the taxes in the last 2 years, the third way they subsidize you is you can carry forward all business losses up to 20 years in both the U.S. and Canada and offset the next 20 years of earnings. So you never lose a properly documented business deduction. The key is, A, you're good, basically you're trying to make money. That's what that means. And you have the right documentation. So you're running your business like a business, you're trying to make money, and you have the right documentation. And I have a whole video on this on Taxbot on how to run a business like a business. It's not hard. Now, there's something else you should also be aware of that's very important. As a self-employed individual, and that's true for any self-employed business, I'm not just talking about direct sellers, but anybody who's self-employed, you have as much as a 700% more likely chance to be audited than an employee. With that understanding, having good records isn't just something nice to have, it is essential, absolutely essential. Or you could be hit with very significant penalties. I see a lot of people put out of business by the IRS because they didn't plan their taxes correctly, didn't have the right records. In my quarter of a century of lecturing on tax and financial matters, I have found that there's a dilemma. Generally, most people are either not taking all the deductions they're entitled to, and I'm going to prove that today, by the way. I'm going to be covering things you probably didn't hear from your accountant. But also, many cases, they're taking the deductions and they don't have the right documentation. And so they're subjecting themselves to tremendous penalties. And you're going to find this to be the case. Now, what's my agenda today? First of all, I'm going to be talking about tax tips for the next 30, 35 minutes. I'm then going to be talking about compliance issues, what you need to do to bulletproof your records from even the smartest auditor. How will that feel? To never have to worry about an audit again because your records will be in great shape. Then I'm going to be talking about how Taxbot, which is software that's designed for the iPhone, the Droid, the iPad, the Droid tablet, and the web. You'll see how that can help you tremendously. We're then going to have a little overview presentation in terms of what is USANA are about and what they do. And if we have time left over, we're going to take some questions. And so I encourage you to write down your questions in the chat box, and we will take them if we have time left over. So please do that. Now, I'm going to be saying some very surprising things, so let me go over why I'm qualified to say what I'm going to say. First of all, I'm a CPA here in the United States. I'm a tax attorney. I'm also a trainer for IRS attorneys nationwide, formerly trainer, I should say, in their corporate tax division. So for those of you who think of an IRS agent as a rat, I guess that makes me head rodent. I'm a featured tax coach with Donald Trump and at the Tony Robbins Wealth Seminars when he was having those. I'm a best-selling author of 2 books, actually. The first book is called Lower Your Taxes Big Time, which I recommend to everybody on the line. But the second book, which is garnering some terrific reviews, is called Achieve Financial Freedom Big Time. And both are available on Amazon and Barnes & Noble. We don't sell it here. And I've been a guest expert on Fox. Some of you may have seen me there, CNN, CBS, CNBC. I'm just saying this, by the way, not to impress you. I just want you to know that I know what I'm talking about because I am going to be covering some surprising things. Now, here's the first tip. How would you like to get the equivalent of free gas? Would you like that? When you write off your car, that's exactly what you get. There are 2 methods of writing off a car in the U.S. Canada has only 1 method. The first method is the IRS mileage rates, which is the more conservative rate, by the way, most conservative method. The second method, which works in both U.S. and Canada, is the actual method. So let's start off with the IRS method since it's more conservative. IRS gives you 57.5 cents a mile for every mile you drive for business. So if you put on 20 miles for business tomorrow, IRS gives you 57.5 cents, which gives you an $11.50 deduction. Now, a deduction is not cash. The amount of cash you get from a deduction is you have to multiply it by whatever tax bracket you're in. And by the way, what does tax bracket mean? Is that the average of what you pay to the federal and state government or federal and provincial government? No. Tax bracket means what you pay on the last dollar you make to the federal and state government or federal and provincial governments. And if you get a deduction, it's what percentage of that deduction comes back as a refund. That's why we always want deductions. And there's an old song that we CPAs sing. You don't want to hear me sing, Liza, but the words are great. Everything is cheaper if you get a deduction. Cha-cha-cha. So let's assume that you're in the average tax bracket for North Americans. The average is 33%, by the way, between federal, state, Social Security, and Medicare. In Canada, it's federal, provincial, and CPP. It could be as high as 54%, but the average is 33. So 33% times the $11.50 in deduction gives you a cash savings on that deduction of $3.80. That's how much you save every single day. And by the way, if you don't have the right records, that's how much it costs you every single day, too. So how do you get gas for free? Here's my point. If gas is $2.50 a gallon, which is about right now, and you get 20 miles to the gallon, not only is gas free, but you're actually making $1.30 a gallon. Does everybody see that? And by the way, who determines how many miles we drive for business? Does the government or do we? And the answer is we do. And how do we do it? From our tax tracker or tax organizer. Now, the second method of keeping track of your mileage, which is probably the better method for both U.S. and Canada, is called the actual method. And there you take your actual business mileage divided by your total mileage, and that's the percentage of car you write off. That's the percentage of gas, oil, insurance, wash, wax, depreciation, sales tax, to the extent you use your car for business, and interest. Okay? And again, who determines our business per usage, how many miles we drive for business? Does the government or do we? And the answer is we do. And how do we do it? From a tax tracker or tax organizer. Is everybody getting the drift? You know, I have people call me on the radio and they say, Mr. Botkin, you make such a big deal about a tax tracker. Will IRS really believe everything I say in my tax tracker? Yes. By regulation, they must accept, both IRS and Canada Revenue Agency must accept everything you say in your tax tracker, unless they can show fraud. So your tax tracker is your audit insurance against IRS, against Canada Revenue Agency. It's exactly what you need to bulletproof your records and keep them off your back. So what kinds of documentation do you need for your car? All right, there are 4 things. First thing is you have to have an odometer log showing your beginning and ending odometer reading for the year. You don't need it for each trip, just for the year. Secondly, you need a mileage journal showing the mileage for each trip that you're taking. Third, you need the address of each trip, so IRS and Canada Revenue Agency can see that the mileage you're putting down is equal to about what the address would be. And finally, you have to have something triggering you to write down the explanation of the business purpose for each trip. Why'd you go there? Did you talk about a product? Did you talk about the opportunity? Did you go to an opportunity meeting? Did you go to a meet with a distributor? Why? But what did you discuss? If you leave out any one of these 4, you are not compliant. And here's an interesting question. If I walk into your house tomorrow, are you ready? I bet you're not. By following what I'm going to say to you today, if you follow my advice, you will be ready. I promise. And here's a hot tip. You know, a lot of times we do personal stuff. We take our kids tutoring, or we go see our mom. That's normally non-deductible. So here's a little tip. You know, there's an old saying in Washington, D.C., where I live, where there's a will, there's a lawyer. Let's say you find out there's a distributor or an opportunity or a prospect near your mom. By doing that, a substantial part of your mileage could be deductible. And by the way, your mom doesn't have to live where you do. Let's say your mom lives in Hawaii. You could put ads in the paper for potential distributors. That's one of the big advantages of home-based business, because you can go anywhere in the world, basically. And now, by doing it correctly, that trip could be deductible, even though you're also going to see your mom. Now, let's talk about vehicles. Right now, in the United States, the most you can write off is $3,160. The most. In the first year in depreciation. You get like $5,200 in the second year maximum. It's like $37 or $38,900 in the third year, and so on. However, if you buy a qualifying truck or SUV, your limit is not $3,160, but your limit is $25,000 the first year as an election, plus you get regular depreciation. That's all in addition. You get over 8 times what the first year depreciation would have been. So what's a qualifying truck or SUV? Basically, there are 2 rules you got to meet. They could be new, or first of all, new or used. Doesn't matter, okay? As long as it's new to you. So if you get a new or used qualifying truck or new or used SUV, and then you can write off up to $25,000. So what's the qualification? 1, has to have a truck chassis. That's the first qualification. 2, it has to have a gross vehicle weight, which means carrying weight of over 6,000 pounds. That's it. And by the way, how do you know if you have a gross vehicle weight of over 6,000 pounds? Here's something your accountant didn't tell you. You open up the driver's door. In the door jamb is a metal plate showing gross and net vehicle weight. If you've got a truck chassis and a gross vehicle weight of over 6,000 pounds, you meet these rules, and you can elect to write off $25,000. By the way, last year, you were able to write off 100% of the business use of that vehicle. Here, you can write off the 100%, but up to $25,000 plus depreciation. So it was actually better last year. All right. IRS and Canada Revenue says that you can write off 50% of your meals as well as 50% of your friend's meal for anyone who's a potential prospect in your business if you talk business. The problem is, who are potential clients for your business? Who can give you referrals? Are your best friends potential prospects? Absolutely. Can they be customers? Absolutely. How about your adult family members? Absolutely. How about your next door neighbor? Sure. In fact, I've never met 2 home-based business professionals get together and not talk business. And that's true with lawyers, that's true with athletes, it's true with everybody. So if everyone is a prospect, here's my point. As long as you're paying for at least part of the bill, how can you ever have a non-deductible lunch? You can't. And if you're not writing off almost every dime you spend, at least 50% of every dime you spend on entertaining, and by documenting it correctly, you are losing money. If you're not documenting it right, you are losing money. You're overpaying your taxes. And I want to mention something about entertainment. First of all, what kinds of documentation do you need? Well, my first question to you is, who has the burden of proof of having the right documentation? Does the government or do we? And the answer is we do. And how do we do it? you have to have something written down, correct things written down in a tax tracker or tax organizer. So what do you need to write down? Well, you have to write down what I call the 5 W's and an H. So what are those? They are who? What's their name? What kind of entertainment was it? Was it a meal? Was it a business gift? Was it an event? Why? Again, be specific. I tried to get a referral. I talked about a specific product. I talked about the opportunity. I talked about marketing. Why? Where? I went at home. I went to Chili's. When? What was the date and how much? Who, what, why, where, when, how much, and you are bulletproof, and you will never have to worry about an IRS or Canada Revenue Agent audit again. How would that feel? Okay? And by the way, I want to emphasize something here. All of you have homeowners insurance. Why? You don't use it every year, because if your house burns down and you have a hurricane or some other major storm and you don't have insurance, that's a disaster. I know you all have car insurance. Why? You don't get into an accident every year. In fact, I'd be surprised if you had an accident at all. Because if you get into an accident and you don't have car insurance, that's a disaster. That's a catastrophe. Your tax tracker is your audit insurance against IRS. It's you have the burden of proof. And once you keep a tax tracker, that burden of proof now switches to the government. So it is just as important as auto insurance. Let me emphasize that. The only difference, however, is that unlike auto insurance, you get paid every single year with the tax tracker, and you get paid very, very well, and you don't get suspended either. Now, all of you probably advertise. You've seen companies advertise on the World Series and the baseball games. What do they charge? Like $1 million a minute? Self-employed people, home-based business entrepreneurs don't advertise in the Super Bowl. However, your form of advertising is viral marketing. When you entertain, you're advertising. It is the same type of thing as a big company advertising on the Super Bowl. And it obviously pays to advertise because you're promoting your business in pursuit of a profit, and you're offering proof that you're running your business like a business. So entertainment is encouraged by both the IRS and Canada Revenue Agency. All right, now there's something called associated entertainment. It's actually called that in the Internal Revenue Code. I bet you never heard this from your accountant. I'd like you to write down the word associated entertainment, put down an equal sign if you have a pen and paper, and then I want you to write down the word fun. Fun. See, we don't need better tax laws. We need better explanations. This is where you're going to a movie. You're playing golf. You're going to a play. You're going to a hockey game. And you're deducting that fun, so you're having twice as much fun. IRS says in their regulations, and this is true for Canada Revenue Agency, that you can write off 50% of your fun, and if you happen to also pay for your friend, 50% of their fun, and this is IRS talking, not Sandy Botkin talking, or Canada Revenue Agency, if you talk business during the same 24-hour day as the fun. Does that give you enough time? So let's take an example. Let's say I go to Liza's home and we talk business, and then we go out and we go to a play. Is that talking business within the same 24-hour day as the fun? Yes. Let's say I was talking to Liza, she lives in Southern California. Let's say I fly out and I meet her for lunch. We talk business, and I say, what do you say we go play golf? And she goes, sure. So we have a business conversation over lunch, and then we go to the golf course. Is that talking business within the same 24-hour day? Yes. Here's the problem. Who has the burden of proof of showing that we're doing business in the same 24-hour day as the fun? We talk business. Does the government, or do we have that burden? We do. And how do we do it? From a tax tracker or tax organizer. Does everybody get in the drift here? What kinds of documentation do you need to bulletproof your records from even the smartest auditors? Again, the 5 W's and an H. Who? What? What was the type of expense was it? Was it a meal? Was it a fun? Was it a business gift? Why? Again, be specific. Why did you take them out? What did you discuss? Be specific. Where? When? What was the date and how much? And you do this, you'll never have to worry about an IRS or Canada Revenue Agent audit again. How will that feel to not worry about that? Have that peace of mind. Think about that. All right, let's talk about a home office. I bet you learned that if you claim a home office deduction, it isn't worth it, and you probably get audited, right? I bet you did. What if I were to tell you that in the United States in 1999, Congress liberalized the home office rules? Now, my question to all of you Americans is, why would Congress do that if they didn't want you to take it? The second thing, and this is true in both the U.S. and Canada, is that I have a friend of mine who actually did a study about people being audited versus claiming a home office versus not claiming a home office. And here's the stunning fact. He found that the actual statistics of being audited were about the same. So if a home office is worth thousands and thousands of dollars, which it is, and you're not taking it, but you're eligible, I'm here to tell you you're crazy if you don't take this deduction. Now, how do you claim a home office? What are the rules? How does it work? Let's take an example. Let's assume this is your floor plan, And your bedroom represents, you're using your business for one bedroom of this whole floor plan, and that bedroom represents 1/8 of your total square feet. And by the way, there's nothing magical about the number 1/8. I'm just picking a number. This is just an example. But what does that mean? 1/8 of the home expenses now become deductible. So 1/8 of your utilities, which weren't deductible, by the way, are now deductible. You're spending the money anyway, but now it's deductible. 1/8 of the interest becomes deductible. In the United States, you might say, well, I can deduct interest. But now that it's part of that interest can be used to reduce your Social Security and Medicare from your home-based business. For you Canadians, you normally can't deduct interest, but by claiming a home office, you can deduct part of the interest. 1/8 of the property taxes become deductible. 1/8 of the maid service, 1/8 of the alarm service, 1/8 of the snow removal, 1/8 of the repairs, insurance. You can take depreciation, which is worth thousands in the United States. Now, for you Canadians, I do want to emphasize one thing. When you sell your home, you don't pay tax, but if you claim a home office and you take depreciation, then you will have to pay tax. In this case, you would take tax on 1/8 of the gain. So it is recommended by most accountants in Canada not to take depreciation. You can take everything else, just not the depreciation in Canada. What happens if you're renting? Can you still benefit from a home office? Yes. In this example, 1/8 of the rent would be deductible. Okay? Now, what are the rules? There are 3 rules. First rule is you got to use an exclusive portion of a room for business. Now, that sounds very reasonable. The problem is, how do you prove that? I bet your accountant never told you. Here's your answer. Once a year, I want you to take a picture. You can store the picture somewhere or use your iPhone and store it on the web. But it's that simple. So take a picture of the home office, get those cookbooks out of the bookshelf. You want to shove it, it's used exclusively. Secondly, you also have to use your room, your home, that room for business at least 45 minutes a day, 4 to 5 days a week. It could be more than that, but at least that. It's much more important to work at home regularly for your business than, say, once every 2 weeks for 12 hours. And finally, your home has to be your principal place of business. In other words, you do your administrative work at home, your paperwork, your management, studying for sales, literature, tapes, things like that. And if you do, and you don't do any other administrative work from another office, which is almost always the case for those of you with direct sale business. You probably are working from your home. You meet these 3 rules, you can now claim a home office deduction and save thousands upon thousands of dollars. I mean, it really is worth a lot of money. You know, a lot of times people ask me, can I deduct my kids' college education? No. How about their wedding? No. How about their room and board? No. How about if I buy a car for them? No. How would you like to be able to get a deduction for the equivalent of every single thing I just said? Would that pay for this hour? Sure. You know, I said you were overpaying your taxes. You know, remember what I said? We have really good tax laws in this country. You can eat away your taxes. You can golf away your taxes. You can play away your taxes. You can drink away your taxes. And now you're going to learn how to write off the equivalent of your college education and weddings for your kids. Now, normally that's not deductible. However, if you were to hire your kids and pay them a reasonable wage, are wages that you pay an assistant in business deductible? Yes. And if they use that money to pay for their own college down the road, their own wedding, their own room and board, their own video games, their own car, aren't you in essence getting a deduction for those things? It's the same money, but in one case you went from non-deductible tuition to deductible wages. Now, what are some things kids can do for you? Well, lick envelopes, address envelopes, clean the business office, wash the business car, deliver flyers, keep track of your inventory. I mean, all kinds of things. Fill out your tax tracker for you. If you live in Washington, D.C. or Ottawa or Houston, Texas, shred documents. I mean, there's a lot of things they can do. You know, I've been hiring my kids to work in my business over the summers and to work on my rental properties. I paid them thousands over the years. And my daughter majored in digital design, which is like web design plus some motion. After about 2 years, she was able to do internships. I wanted a brand new website for my Tax Reduction Institute, and I got a quote, a big quote, because I wanted some bells and whistles. But it was a little high, so I asked my daughter if she can do the same thing for something less, which she did. I was able to pay her an amount almost covering her 2 years of tuition. I saved tens of thousands of dollars hiring my kids. And if you're not hiring your kids, you are overpaying your taxes. I told you we're overpaying it, and this is a good example of that. Now, and what's interesting is that the first $6,300 they earn is income tax free because they get a standard deduction on their own tax return against wages of $6,300. So you get a deduction, they get that money tax free. For you Canadians, it's even more. It's like I think it's close to $12,000 that you can pay them with no income tax. And even if they do pay income tax, it's at the lowest bracket in the United States or Canada, whereas you're in a much higher bracket. So you still come out ahead. You know, a lot of times people say, wait a minute, Sandy, what about credit cards? Isn't that good enough? IRS agents and Canada revenue agents love people who think this way. Because think again, you need more information than the credit card provides, because in tax law, you are guilty until you prove your innocence. You, not the IRS, not Canada Revenue Agency, you have to prove all your deductions were business related and that you're following the rules, such as trying to make money, working your business like a business, not like a hobby. The government doesn't ask for much. They really don't. All they ask to subsidize you is that you follow their rules, you have the right records, and you try to make money. You're a good bet. That's all they care about. And by the way, people ask me, what about accounting systems like Quicken and QuickBooks? You know, most accounting systems are good for telling you where you spent your money, but they don't hold water when it comes to proving tax compliance. There's no room in QuickBooks for your mileage log, for example, or for the entertainment questions or the travel questions. In fact, if truth be known, a good tax tracker can replace Quicken, whereas Quicken cannot replace a good tax tracker. How would you like if you had a personal assistant to be able to do everything for you that I said? In other words, keep all your mileage logs for you 24 hours a day, 7 days a week. Wouldn't that be great? And to keep all your receipts so safe that even if you have a flood or fire, you'll never lose the receipts. And to keep all your tax note diary for you for all the questions for entertainment, travel, so you'd never have to worry about procrastination. Wouldn't that be great? The problem is, if you hired somebody like that, even at minimum wage, you'd probably pay a fortune. You pay a lot of money. What if you can get somebody like this for pennies a day? Not pennies an hour, pennies a day. Would that be something that you would do? Of course, that's cheap enough. Let me introduce you to the best tax assistant you are ever going to meet. It's called Taxbot. It has a 4.5-star rating in the App Store. Taxbot has a number of great features. First of all, it has no more mileage, no more car logs and filling out all this stuff. You have an integrated mileage tracker with a GPS system. And there are 3 ways of keeping track of your mileage. The first method is the manual approach. Now, manual is not what you think it is. It's not like when you write all this stuff down. With manual, you just turn on the mileage tracking. That's what manual is. You'd be surprised how many people don't realize it. All you do is turn it on. Once you turn it on, the GPS follows you. And when you get to your destination, you click stop mileage tracking. So the manual means you turn it on, and then you click stop when you get to your location. Now, what happens? The Taxbot will do the rest for you. It will automatically figure out what the address was when you turned on Taxbot. It'll actually give you the address, which is what is required by IRS and Canada Revenue Agency. It'll automatically give you the ending address where you turned it off. It'll automatically give you the date. It'll automatically give you the mileage in the U.S. or kilometers in Canada. You just click on whether it's business or personal. It'll even do it round trip for you. All you have to do, you click save, and you put in what the reason is, what the business reason is, the business purpose. That's it. That's all you type in and click save. And that's called the manual method. Now, I want you to notice something else here. With Taxbot, you'll see it says My Business, and you'll see the F-150, that's for the Ford 150. Taxbot works on up to 3 different businesses, 3 different cars simultaneously. So, for example, let's say you've got a business, your spouse has a business, and let's say your kids have a business. All 3 of you can use Taxbot. All 3 of you get separate accounts, separate reports on 1 account. You don't need separate Taxbots. It works on 3 businesses, 3 cars simultaneously. It also works on different devices. For example, I have an iPhone. My wife has a Droid. We both can use Taxbot on the same account. This Taxbot works on the Droid, the iPhone, the Droid tablet, the iPad, and the web. You can even switch devices. You know, like if you use it on the iPhone, but then you want to use the iPad, you can do that. Now, that's the manual method. The second method is what I call the automatic method. Here, you don't turn on and you don't turn it off. It's automatic. It's done for you. You don't even have to press a button. Can't get easier than that. You know, let me emphasize something here. I designed Taxbot for me. One thing I found about myself, I hate documenting. I do it because it saves me money, but I hate it. But one thing I will do, at least it's true with me, if it's simple, easy, and fast, I like doing it. If it's not simple, easy, and fast, I won't do it. I'll have a harder time anyway. This is about as simple as it gets, and I designed this for me. So here you have an automatic tracking of your mileage. That's it. So you have to worry is about expenses, and that's it. So how does the automatic tracking work? The way Taxbot works is, the automatic method works, is you have the automatic on, and then you start driving. The minute you go over a certain speed, I think I can't remember if it's 5 or 15 miles per hour, Taxbot mileage tracking turns on. It's automatic. You don't do anything. Now, it'll follow you along exactly the same way as the manual method. Now, the minute you stop, you don't have to worry about turning it off, because once you stop for 5 minutes or more, Taxbot turns off the mileage tracking. And it gives you everything that the mileage tracking gives you, the manual method gives you. It gives you the beginning address. It gives you the ending address. It gives you the mileage. It gives you the date. All you do is type in the reason why you did it, click on save as business or save as personal, whichever one it is. You can do that right there and then. And Taxbot will summarize all your mileage between business and personal mileage on the web. Everything gets stored on the web. So if you lose your phone, you don't lose your data. Let me emphasize that. And that's automatic. You don't turn it on, you don't turn it off. Really simple. Now, there's a third method, and I call this the reconstruction approach. What do you do if you didn't bring your phone? What do you do if you're in a dead zone? Your phone doesn't work. Or you didn't have Taxbot for the first few months. For some reason, this is a very popular part of my program. Here, you'll actually put in Taxbot the beginning address and the ending address, where you went. You put that from your appointment book. It will drop a pin on each side and actually compute the route, which you can adjust with your mouse. And again, you can do this with reconstruction with 3 businesses and 3 cars, no problem. And that's called the reconstruction approach. So that's one thing Taxbot has, and that's an integrated mileage tracker with a GPS system. The second thing it has is an integrated expense tracker. Now, this one is terrific too. Let's say I'm going to have a lunch with Lisa, and I click on Add Expense. You'll get a whole category of expenses, all of which, by the way, are editable and customizable. So if you want to add something that's not there, you can do it. Or let's say you forgot to turn it on and you realize, oh, I forgot to deduct my lunch. You can actually go into Taxbot and add it individually. It's fully customizable. So what happens? You click on Add Expense, you'll get a whole category of expenses. One of those happens to be meals. You click on Meals on your iPhone or your Droid. The minute you click that on, all the tax questions that IRS and Canada Revenue Agency pop up. So you avoid procrastination. It'll absolutely eliminate procrastination. So you simply type in who, what type of expense it was, why, is very important, where you went, when is automatic. That you don't even type in. That's going to be automatic. And finally, how much. You then and then you ask if you want to take a picture of the receipt. You then click Attach Receipt. And by the way, Taxbot's the third thing it has. It has an integrated camera. So the minute you click Attach Receipt, you'll see like a lens. You click on the lens, a picture, and this is exactly what the picture looks like, by the way, on the receipt. And I do want to emphasize that IRS and Canada Revenue Agency now has said that they will accept digital documentation. They don't need the paper. And the reason is they see all this fire and Hurricane Katrina, Hurricane Sandy, and people losing their records. So they are accepting digital documentation like Taxbot. I want to make that very clear. Now, the minute you take a picture of the receipt, you click Save. What will happen is everything will go on the web, your data and your picture. So if you lose your phone or you get a new phone, you don't lose your data. And by the way, speaking of data, I want to emphasize something here. Taxbot's kind of like a BMW. There's more under the hood than it appears. We take data security probably more seriously than I think any company that I know of in the industry. Every bit of our data is encrypted, which a lot of companies aren't doing. That's why they're having hackers. Fully encrypted, and they're saved in places like the big banks store their data. It's in multiple high-security data centers in several locations in several cities. I mean, you'd have to have an atom bomb to lose this data. I mean, we really take it seriously. But the whole purpose of an expense tracking software is the reports. And you get our audit-safe reports. Here you'll be ready for the toughest IRS audit or Canada Revenue Agency audit. How will that feel? And here's an example of what the reports can be generated in any way you want, very, very flexible. You can generate it by date. You can generate it by category. You can even generate all the categories at once for your tax return or for your accountant. And the way you do that is you go on Taxbot, you click on Reports. It will then download it to a hard drive. You can download it to a memory stick and then email it to your accountant. I mean, you can't get easier than this. You really can't. We found we can do this in about a minute and a half a day, and it's that easy. And by the way, you also get graphs on what you're spending on every category. Now, why is that important? Because that'll help you budget, so you'll see what you're spending. Now, in addition, Taxbot will look for missed deductions. What you do is this is interesting technology. You give them your credit card or bank card, and it will actually search every day for charges that weren't in Taxbot. And then when you go on Taxbot, the website will send you a message asking you, is this business? You want to add this to Taxbot. If you do, you just click on yes. If not, you just say you don't do anything. And by doing this, all your business expenses will be in one place. Really interesting. Now, in addition to the expense tracking, the mileage tracking, the integrated camera, the integration with your bank and credit cards, you get me. I have probably the finest online education library in the country. I have over 40 3 to 5 minute videos on a wide variety of topics, from asset protection to education to writing off gifts to home office, you name it. We have over 370 blogs on a wide variety of tax and financial areas. Like I just did a blog on how to write off all your clothing, how to write off cruise ships. There's 2 ways to write off cruise ships. I just did a blog on that. We did a blog on how to protect your assets, asset protection, how to evaluate nursing homes for parents, and much, much more. We had a major reviewer say that you get one idea from our blogs, you have saved thousands, and you really have. I mean, there's a tremendous online library in Taxbot. We have seen, I'm a CPA and attorney, and I just want you to know I've been seen on CBS, CNBC. We've been cited, Taxbot's been cited on CNN, Fox. Now, in addition, in the front of Taxbot, it'll actually show you in real time how much you are generating in deductions. Talk about motivation. Every major direct selling organization that I know, every major leader is recommending Taxbot to their downline. Why? Because by doing this, when people put in $300 a month in their pocket, $500 a month, $800 a month, $1,000 a month, this will reduce attrition, because if they ever quit, this is what it costs them. Attrition has gone down tremendously. You know, you can make April 15th easy. Normally by April 15th, I look like this on the left with spreadsheets and papers. It was just horrible. Now, in less than a minute and a half a day, I can do everything. That's all it takes. For those people that want something simple, easy, and fast, this is about as simple and easy and fast as it gets. One button, basically. What do our customers say about Taxbot? It has a 4.5-star rating in the App Store. It was rated #1 in expense tracking software in North America by top 10 reviews. It was rated #1 in 2013, 14, and we just recently got it rated #1 in 2015. We are recommended by real estate associations across the country. We're recommended by the National Society of Accountants for accountants. This is for all the accountants in the United States. Anybody belonging to the National Society they're recommending Taxbot for all their clients. And they recommend Taxbot by New York Stock Exchange billion-dollar sales companies are recommending it. I mean, there's a reason. It's really that good, and it's that simple and easy for those that want something simple, easy, and fast. Probably the easiest that I can think of in the country. Now, what's the power? What's the cost of Taxbot? The investment is only $9.99 a month. That's all it is for everything. And or if you want, you can even save 2 months by going for the year, where you get $99.99 and you save 2 months. And it's not even, by the way, $9.99 a month. Why not? Because it's tax deductible. Remember, everything is cheaper if you get a deduction. Cha-cha-cha. So it only costs you about $5.40 a month after taxes. So what is that? 18 cents a day? Remember I said it would be pennies a day? 18 cents a day, you get that peace of mind of never having to worry about an IRS audit again, and you will put thousands and thousands in your pocket. To get started, click on the icon on the right just to get started, or if that doesn't work, go to www.taxbot.com, and it'll ask you to sign up, and then it'll ask you for a coupon code at the end. You want to use the coupon code, one word, BEST DEAL. You don't need the quotes. BEST DEAL, D-E-A-L, and then you will get it at this price. In addition, by the way, for everybody who signs up in the next 24 hours, when you get the recording, you're going to get our premium service, which we charge $259 for. Now, what's our premium service? You get to call and ask unlimited tax questions with accountants, with enrolled agents, with CPAs or chartered accountants in Canada, on much as you want. Number two, I mean, that alone is worth the $9.99 a month. Number two, you get our Audit 911 service, which will advise you on what to do if you get audited. Number three, which I like a lot, they're going to review your last year's business tax return for ways to save in the future. All of this is free as part of the $9.99 a month, by the way. And then finally, all professional services are backed by a $1 million insurance policy. I mean, you can't beat this with a stick. In addition, we guarantee it. We have a 100% guaranteed satisfaction. And the way we give it's like an insurance policy. We want you to try Taxbot for 2 weeks. It's a free trial. If you find you don't like it, you don't get no problem. You get refunded the money, not a problem. In addition to that, you get a 45-day money-back guarantee. Not 2 weeks. You get a 45-day money-back guarantee through this offer, which we normally don't give. We are giving it through this offer. So if you find, and what's our guarantee? It's very simple. If you don't get at least 20 times 20 times that $9.99 in the first 45 days. So we're guaranteeing 2,000% rate of return. We'll just cancel. And you're going to average about 10,000%, but we're guaranteeing 2,000% rate of return. Where are you going to get that anywhere? Okay? And if you still have tax questions, we're going to be sending you a copy of our ebook, Targeted Tax Breaks for Your Home-Based Business. Again, to take advantage of Taxbot, I don't know why you wouldn't, but to take advantage of it, go to, click on the icon on the right, or if that doesn't work, go to www.taxbot.com, use the coupon code. When you sign up, it'll ask you for a coupon code, BEST DEAL, one word. Okay, and you will get at this price, and it's fully tax deductible in both U.S. and Canada, and you will get our targeted ebook plus all the professional series of being able to talk to accountants, as well as having your last tax return reviewed. Hopefully, I've convinced you of the horrible mistake of overpaying your taxes, and I apologize to anyone who doesn't get this, because I must have done a crappy job, because you're going to unfortunately pay more than everybody else who does get this, and that's just the way it is, and for the rest of your life. You know, the bottom line is do something, okay? You have a 700% more likely chance of being selected for an audit, and there's lots of tremendous tax benefits available to you. Do something. You want to use another expense tracker, you want to have a fireproof safe with it, hey, go for it. But do something. That's the bottom line. I mean, to me, this is about as easy and simple as it's going to get, but just do something. All right, I'm going to turn this over to Jeanelle. She wants to do a little bit of a discussion with you for a few minutes, and then we're going to take questions if we have time. If not, we'll have to do it another time. Jeanelle?
All right, sounds good. Thank you so much, Sandy, and I'm so honored to be here. Let me just turn on my screen share here and make sure you guys can see my screen. And hopefully you guys can see my slides. All right. So let me go ahead and get started. Now, first question I want to ask the audience is this. If someone offered you a sack full of cash, no strings attached, let's say $10,000, would you throw that sack of cash away? You probably wouldn't, right? But in essence, if you don't own a small home-based business, you're basically doing the same thing. And I think Sandy did a great job in illustrating that fact. Now, I've been a registered nurse for almost 15 years, specializing in critical care and education. With a young and growing family and the prime breadwinner for my family, working my standard 3 12-hour shifts just wasn't enough. I started to work a lot of overtime, 5 days a week, which is very typical for a lot of us nurses. But that still wasn't enough. So I decided to take on a couple more jobs and became faculty at a couple of colleges. So working every day became the total norm for me. And like the typical nurse, I took excellent care of all my patients and clients while neglecting my own health. Then I decided, well, you know what? Maybe I need to start my own business and be my own boss. And I started to do that. I did open my own health education company where I taught classes like CPR and exam reviews and things like that. And that's when I first truly understood the benefits of owning a business and the savings on my tax expenses owning a business saved. However, with that type of business model, I still had to put in way more work, more than being a traditional employee, just to make my business profitable. So my business started to feel just like another job to me, but that totally changed when I met my current business mentor, Michael Callejas, and was introduced to the USANA opportunity. Now, when you're choosing a business, there are 4 key things you really need to look at. Number 1, you want to select a large and expanding market. Health and wellness is an expanding business and currently one of the top industries today. And with today's health reality and sobering statistics, virtually 100% of the U.S. population can benefit from ways to improve their own health. Number 2, you want to choose a consumable product. Consumable means repeat business and consistency. Remember, when I had my old business teaching classes, I only got paid for those classes. People didn't need to take a CPR class on a monthly basis. Number 3, you want to market products that are unique. If you don't have a product that makes you stand out in this huge competitive marketplace, you're going to be in trouble. And USANA has a product that actually does it correctly and is created in an FDA-registered facility. And as a health professional with a respected reputation within the medical community, I would not put my credibility on the line by recommending products that are subpar or poor quality for my clients. Last but not least, you want to create a means to leverage yourself. Health is a valuable asset, but so is time. And I used to trade time for money, as all employees do. The more time I put in, the more I got paid. The downfall was, however, less time spent with my family and not being able to live the life I truly enjoyed. So I've proudly partnered with USANA because this company strongly meets all four of these key points. Now, why do we recommend network marketing? So the question is, if you truly want to learn what it takes to become successful, you'd want to learn or be mentored by someone who has achieved success at a level you're striving for, right? So we've got here Robert Kiyosaki and Donald Trump, both business entrepreneurs, and I'm sure you guys have heard of them. And they've teamed up to come up with this publication, Why We Recommend Network Marketing. And let me just read a quote here that's right here on your slide. We found a business model that stood out from the rest. This particular business creates passive income and can be operated on a flexible part-time basis. This business model is called network marketing. Now, with network marketing, you have a team and an organization focused on your success as opposed to your defeat. And instead of the traditional corporate marketplace where you have to basically compete and devour your coworkers to get to the top, this business model is different, where actually helping your fellow associates is what really gets you to the top. This is also the only business structure out there that I'm aware of that gives the common Joe or Jane a chance to start a successful business with minimal risk. So, and I personally believe that the evolving maturity of our industry is clearly demonstrated by the numerous network marketing companies that are now publicly traded on the New York Stock Exchange, with USANA Health Sciences being one of them. Now, my life today. So going back to my story, you might ask, well, where am I today? For starters, let's just say that I actually finally have a life and that I'm not just surviving, I'm actually truly living. Now I have the time to take my kids to school in the morning and attend school functions that I never was able to experience before in the past. I'm active in my community giving back. I have the opportunity to travel, tax expense, of course, deducted trips with my family and friends all over the world. And I'm the healthiest I've ever been and look forward in partnering with USANA to build a residual income I never knew possible. Now, like the slide states, the power is in opportunity. And one of Sandy's book is one of the first books I bought when I actually started my business, and I like this excerpt from there. The light at the end of the tunnel is the financial opportunity that starting your own business offers. Every North American taxpayer who works a full-time job, does not have a side business, is probably overpaying taxes to the tune of $3,000 to $9,000 a year. So, you know, USANA is an incredible opportunity, but obviously we are not the only opportunity out there. But after doing my research, that is the company I chose to partner with. 95% of those who survive 10 years in this industry become wealthy beyond their wildest expectations. So what's stopping you from becoming part of that 95%? Now, I don't have time to go into detail about USANA. Feel free to click on this awesome link with Jordan Kemper. The link is right there on YouTube, Why USANA Today, to get more information. But please do take advantage of the Taxbot app. All members in my organization utilize this app. I've personally saved almost $12,000 in taxes that would have gone straight to Uncle Sam. So my wish for you is to take control of your financial well-being, work smart, apply these tax-saving strategies you just heard from Sandy, and I'm a huge believer in investing in products that will save me my most valuable asset, which is time. It's a simple app. It's easy to use. Again, it gives me more time to focus on building my business. So with that being said, I'm going to hand the mic over to Jake.
Hey, thanks, Jeanelle. Hey, we've got time for just a couple of questions here. I'm going to, Sandy, just get you a couple of the ones coming in real quick. Here's an interesting one. Can you write off business attire, and if so, how?
Good question. Normally, business attire is not deductible. However, if you have a distinctive outfit that identifies what business you're in, then it is deductible. So, for example, if you have a stitched-on logo that says USANA on your blouse or on your jacket, then that item, not only is the purchase of that item deductible if you bought it with a stitched-on logo, but even the dry cleaning of that outfit is deductible if it has a stitched-on logo. But that's the key. But normally, if it's no stitched-on logo, if it's just normal jacket or pants or blouse, it's not deductible. It has to be distinctive to show what business you're in.
Good answer, Sandy. Here's another one. Can you write off graduate school tuition as a tax deduction if the major you're in is related, or if it is related, or if it's not related to your business?
Graduate school tuition is only deductible if you've already had a job first, and then you're going there to improve your skills. It's got to maintain or improve your skills. So, for example, my son is a lawyer, and he went for an LLM in tax. That will be fully tax deductible. If, however, if it's a brand new occupation, if it qualifies you for a new trade or business, then it isn't deductible. So if you're going to med school, nursing school, law school, that wouldn't be deductible. So the bottom line, it's got to maintain or improve your skills and not to qualify you for a new trade or business.
Good question, or good answer. One more question, Sandy. I know it's the top of the hour and you got to go, but here's an interesting one. How do you know how much you should pay your kids if you're hiring them in your business?
That's an excellent question. We have a whole blog on that and a video on that in Taxbot, by the way. It's also in my book, Lower Your Taxes Big Time. The key is you have to pay them a reasonable wage. If it's not reasonable, the government's going to disallow it. So what's a reasonable wage? A reasonable wage, by definition, is what you would pay an outside agency to do the same thing in your business, or less. So let's take an example. Let's say you want to hire your kids to mow the lawns of your 5 rental properties. Who would you call? You'd probably call a lawn care service. Somebody at one of my seminars said my daughter's boyfriend. But you'd probably call a lawn care service. Let's say they charge you $60 a lawn. You pay your daughter something less, $50 or $45. Let's say you want to hire your kids to do some filing in your business. What kind of an agency does filing? Manpower, Kelly Girl. Let's say they charge you $40 an hour. You pay your kids something less, $35 an hour. Get a quote to show what an outside agency would charge you and pay your kids something less, and that amount will be reasonable for the hours they put in. And, of course, have timesheets to show them the hours they did.
Awesome, Sandy. Thanks so much for doing that. I know it's top of the hour. Liza, I'm going to turn it back over to you.
Oh my gosh, Jake, Sandy, thank you so much for all the information that you shared with us. I definitely had a couple takeaways. The fact that we're 700% more likely to get audited, to me, is crazy. So utilizing Taxbot and utilizing all the different tools that Sandy gave us tonight is definitely going to save you massive amounts of money on your taxes. So if you don't already have Taxbot, I really, really highly recommend you going down there, registering for that, and utilizing the deal that they have to offer. And remember, if you don't do that, you're making a horrible mistake of overpaying on your taxes, and he gave us 1,000 different reasons as how to save on your taxes and why you should. Jeanelle gave us multiple reasons as different ways that you can do that and different business opportunities that you can take a part of. But only 4% of people are able to retire at age 65, as Sandy told us. So 60 or 96% of those people that can't retire at age 65, man, I just would talk to them, explain to them tax savings, explain to them the idea of a home-based business and what you can do with that. So thank you so much for everybody being on the call tonight. I hope you got a good takeaway for it. He's going to email you a recording of this, so if you want to listen to it a couple times, get this information out there to your teams. Remember, the next 24 hours you're able to go on there and get the deal that they have offered. And remember, he has a 100% guarantee for money back if you don't have 20 times the saving of the $9.99. So again, thank you guys so much. You guys are all incredible. I hope that you save a bunch of money on your taxes, and I am going to be honest, I'm a little late doing my taxes, but I get excited every year, especially now that I'm using Taxbot and understand the idea of tax savings with a home-based business. So thank you guys so much. I hope you have a fantastic evening, and follow Sandy Botkin on Facebook, on Instagram, and definitely get those tips from him because they will be highly needed and very, very useful. Thank you guys so much. Have a fantastic evening.